From the floor of the CME Group, this is Danny Riley on this Wednesday, September 29th. You know, really, all the pits down here are semi-active. We were seeing some big orders going into the Eurodollar options, and we saw some earlier stuff going into the 10-year note options. But we'll go back to the S&Ps now. When I got up this morning, the S&P overnight had gone down a little bit, and then it was steady to a little higher by the time we got down to the trading floor. There's not a lot of trade going on here. As we go into the end of the third quarter, the last day of the quarter is historically known for window dressing and portfolio buying, but it's also known for a lot of big sell orders. So this morning what happened was we opened a little steady-ish, we rallied up, and then we sold off. But during that sell-off, the S&P continued to back and fill as it went down. It made several new lows, and every low that it made, it popped back up, and then every time it topped down, it backed and filled and it started to go up back again. Now the S&P got down to the 1036 half level. We're back up at the 1041-ish level right now. And what it really has been going on here is that it seems like a little bit of push and pull going on between the mutual funds and the sellers. And into that, we've seen a lot of buy and sell programs, but they're very, very small. Now, as far as volume is concerned, we came in with about 280,000 minis traded prior to the open, and we've got about 1 million right now. So that's about 720,000 traded in the day session. As far as the big contract, we've got about 4,500 traded there. That's been kind of iffy lately. You know, the volumes come and go in there, but today we're not really seeing a lot. As far as the rest of the day was concerned, you know what? When we put out the equity report today, we said that we thought that the markets could continue a little higher. But we were also concerned that there could be some late day selling, and then tomorrow we're still looking for that trade that the Pitbull taught us, which is the walkaway trade, when the mutual funds tend to run out of money going into noon, 11, 12 o'clock Chicago time, and the market starts to drift down a little bit, leaving the S&P susceptible to a sell-off. So, you know what, we're not really sure about how the price action's set up right here. We've had a big rally. We've had over 120 handle rally in the S&P. We're up against some good resistance, but there is a gap above, and this is what we were pointing out in the equity report this morning, and I'm not sure of the date. I think it was around May 16th that the S&P popped up to the 1153. There's a gap up there, 1153, 1154 up to 1158, and that was kind of what we thought that would happen today, but we're just not seeing it. It's almost as if a lot of the buying has been used up, but the market's still holding, but there's really not a lot of trade on either side. We'd like to give you some more, you know, but really, when we're looking around the floor right now, it looks like there's been a little bit of like selling in stocks and buying in bonds, things are shifting around a little bit, but there's really no clear defined trade here. As we go into the later parts of the day, again, we kind of think there could be some selling sniffing around, but right now the markets are firm. We'll see you in the morning with another update.